Hi guys and welcome back to my channel. It's a pleasure to have you right here. So in this video we're talking about fair value gaps and imbalance. Fair value gaps and imbalance. And this is a video in the series titled Forex Trading for Every Beginner. Alright, so we're talking about fair value gaps and imbalance. So many people have had this confused and have had it mixed up. But however, both of them means the same thing. Alright, so what is fair value gap or imbalance? Now in the original structure of price is supposed to move in a balanced way where three consecutive candles have contact with each other. All right, so where three consecutive candles intersect and have contact with each other. This is technically how price was designed to move. However, in some cases, there is no balance between any three consecutive candles. When there is no balance within three consecutive candles and a gap is created, we call it a fair value gap or an imbalance. So straight to some graphical examples that are going to help you understand this concept, all right? So we're going to be looking at those examples right away. Now, this is the first example of a fair value gap or an imbalance. Now, when we have three consecutive candles, just like we mentioned in the chart, candle 1, candle 2, and candle number 3. Now, you can see the high of candle number 1 and the low of candle number 3. This is a buy scenario. Okay, so we have the high of candle number 1 and the low of candle number 3. They are intersecting at candle number 2. They are meeting at a meeting point of candle number 2 when you draw a straight horizontal line across them. When there is that intersection, we say there is a balanced price. Whenever there is that intersection, we say there is a balanced price. However, if we have that candle number 1 and candle number 2 and candle number 3 are not intersecting. When we know that, we will have to check it out by putting a horizontal line across the high of candle number 1, just like this, and another horizontal line just across the high of candle number 3. All right. When there is no intersection, you can see that there is now a gap between the two of them, and that gap is at candle number 2. When there is a gap like this, what we say is going on there is a fair value gap, which is FVG, or imbalance, which is IMB. Both of them means the same thing. So whatever name they are called, you should understand that. All right. So when there is that gap between the three candles, and the high of candle number 1 and the low of candle number 3, there is a gap which is creating a body at candle number 2. All right, it's called a fair value gap and an imbalance. Remember, they're supposed to intersect. They are both supposed to intersect when you draw a single line across the both of them. All right, when you draw a single line across the high of candle number 1 and candle number 3, they are both supposed to intersect. But in an event where they do not intersect, that means that there is a fair value gap or an imbalance right there. And what do we expect price to do? We expect that price is going to trade away from that region and return to this place of fair value gap, then continue. So this is how we take advantage of price. When price returns here, we take a buy and then we continue straight to the upside. All right. So let me give you one more example of a sell scenario so that you understand. Now, in the original movement of price is supposed to trade from point candle number 1, candle number 2, and candle number 3. Now, in the low in the sell, this is a sell scenario, by the way. In the low of candle number 1, if you draw a straight horizontal line, it's supposed to intersect with the high of candle number 3. In an event where they do not intersect, like this, right, when there's no intersection between these two of them and you draw a horizontal line across the high of candle number 1, and another horizontal line across the high of candle number 3. When they do not have an intersection and there is a gap which is at candle number 2, that place is called fair value gap or an imbalance. And what do we expect? We expect that price is going to trade back into it to revisit it on maybe the next candle or subsequent candles. After price has revisited it, we will now take ourselves and continue selling downwards. This is the simplest explanation you're going to ever get for fair value gaps and imbalances. Okay, so you can watch these videos and rewatch it and look for examples in the chat, and you're going to see a whole lot of those examples in the chat. But because this is a beginner series, we want to keep it simple and short so it's easy to comprehend for everyone. All right, so if you're new to this channel, make sure you subscribe if you've not subscribed, and like this video if it was helpful, and we're going to meet in the next video. Until then, wish you good luck and good trading. Cheers and God bless, guys. See you in the next video.